Okay, guys and girls, the $1 million question that people ask us is, what do you reckon we would buy and where's the best market and where's the best growth? As agents of over 30 years, we're going to give you our intel on Sydney, particularly the northern beaches, and how to spot the next winner. Stay tuned.
I'm the ringleader, so listen up.
Billy Drury!
Good morning, Mr. Novak, property doctor of 30 years.
How are ya?
Yeah, good, excited. You know, realestate.com stock levels, they've just crept back over 600 properties. We're now at 619 listings online. For the last 4, 5, 6 weeks, that's been below 600. Could this be the start of spring? Stay tuned.
Yeah, it's only a week and a half to go. We're into spring. What's also interesting is units and houses, two-speed economy. They're both
Yeah.
performing very, very, very differently. Hey,
Yeah, they're definitely moving at different speed. Days on markets, we're going to give you some numbers this morning, give you some context.
now it's off the back of, I think everyone's got to cast their memory back to COVID days. When rates were circa, which is still unbelievable to even hear, were circa 2%. Then rates sharply increased to circa 6.5%. Not only did that hit the back pockets severely, tripling repayments for Australians, but also economically, and then also the ability to borrow money changed vastly for people. And we're in the hangover effect now. So I think that it's harder to lend money. We know that 2% compared to 6.5%, the last couple of years. And then we know it's harder to service that debt. So if you think of the concept of everyone spending large, they did go out and buy houses. And now with the belt tightening up, they're now going out buying units. Units fell behind, houses pushed ahead. And they've always generally been sort of pretty equal in terms of their performance, but definitely not when you take the averages of houses and units the last 5 years.
Now, do you want to run the data this morning and tell us 10-year average for units and houses? Or do you want me to do it?
Yeah, so we've been watching this closely since, I've been, probably the last 10 years. And if you speak to a real estate agent anywhere in Sydney, they'll tell you that generally the property market will this goes back 40, 50 years. They'll generally say the property market will double. Conservatively, they'll say that's over 10 years. So, that's, units, yeah, that's what they do. And houses, yeah, that's what they do in relatively good suburbs of Sydney. So that expectation, just to roll that on a percentage, is about, say, 100%. So if it's done 50% in capital growth, as an example, you give me $1 million and say, buy me a house. 10 years later, you come back and say, where's my money? I give you your $1 million back and I give you 500,000 on top. That's 50% growth. Again, to give that example, if you gave me $1 million 10 years ago to buy a house in Narrowena, today I would be giving you back, believe it or not, your $1 million, your seed capital back, and then I'd give you probably 1.2, 1.25 on top of the million that you invested. That's 125% capital growth. So if we're talking numbers, just so people can understand how you put growth into a percentage, that's what we want to talk about.
Yeah. And then in the last sort of 4 years on the back of COVID, from 2021 to 25, there's been a change in direction for what people are now looking for. Also with investors, people are very conscious about land tax. I was talking to a gentleman who owns a lot of New South Wales property, and he's saying there's just no appetite to keep buying in New South Wales now with land tax. I'm moving my investment out of the state, buying over in Western Australia and Victoria. Interesting.
Yep, it adds up. It definitely adds up. So, Billy, where are the next hot spots to put your money in property?
Well, I'll tell you what's flying off the shelf at the moment. Anything sub $1.5 million, whether that be 1, 2, 3-bedroom apartments, we cannot list them quick enough. And the first open homes, the first Saturdays, it's quite interesting. On average, we're having about 15 people come through an open home on a Saturday. It seems to be the same 15 people that we've met the week before. And then it tapers off quite quickly. Within that second week, the open home numbers are dropping back down to sort of anywhere between 5 and 10. So it does taper off, but the entry-level apartments are doing particularly well. And anything that's considered affordable in its price point. Now, every price point's got something more affordable than others. And I'll give you an example. A townhouse is more affordable than a house. A 3-bedroom apartment's a little bit more affordable than a townhouse. A big 2-bedroom apartment's a bit more affordable than a 3-bedroom. So whatever's sort of starting that next price point stock-wise seems to be doing really well. I don't know if that's going to last though.
Yeah, it's I think if I'm going to be buying at the moment, and I was with a professional footballer yesterday. Yeah, superstar. And they were, and they were saying, what do you reckon? 1-bedroom, 2-bedroom, 3-bedroom house. Where do you think it's going to perform? And I think it's a really interesting question to ask an agent that actually has been around a while. I think because they've seen patterns, they understand generally, they've watched people make money and they sort of can assimilate similar patterns. A good agent. And I was, and he was saying to me, "Hey, what do you reckon? What do you reckon? 1 bedroom, 2 bedroom, 3 bedroom?" And I'm really a big fan at the moment. And I think today is about where we see growth, that's going to be achieved in the marketplace. I'm a massive fan of exactly that category you've mentioned: 1 bedroom, 2 bedroom, 3 bedroom units. I'm not a fan of houses because I think they've stretched their legs already. If you look at them with capital growth, they've done more than double in 10 years. So I think they're going to be conservative. And I also think the land tax you mentioned is another thing that's super, super valid that I think people are keeping away from. But, Billy, you've got one of your favourite saying on capital growth?
Supply is the enemy of capital growth. And it's so true. So if you're buying in an area where supply can just be continued to be introduced, whether that be strata or Torrens title, doesn't matter. It will constantly, erode capital growth over a 10-year rolling average. So you've really got to pick these blue chip locations where, stock has got somewhat of a limit. Northern Beaches has been earmarked for a lot of growth with property. We had some zoning policy changes, but fundamentally, there's still a real shortage of land.
Yeah. And if, guys, this is a live show, so if you've got any questions, throw them in. We'll answer for you. On the fly, we'll answer them for you. Suburbs, areas, no question is a silly question, just ask. So supplies in mere capital growth, what we mean by that is if the amount of properties in that area are doubling, total amount of properties in that area are doubling or tripling, I would say that's a lot of, probably almost too much supply for the area to take up. That's taking into consideration the new stock and the existing stock overall doubling. To give you an idea, places like Mascot went from 2,000 to 4,000 to 8,000 to 16,000 to 32,000 within a time of probably about 15 years, 20 years. So it just kept multiplying out of control. Places like DY that appear to have had a lot of units because they're on the main road only. DY had 8,600 units and it went to 9,500 units over a 65-year period, 70-year period. That's not a lot of percentile growth. So stick to suburbs where there's low supply. I love a good secondhand suburb, and then stick to units at the moment. I think they're going to be the highest performers. So first home buyers win, mum and dad investors buying a unit win. And I think hold the fort with houses. They're just I can't see a lot of great growth over the next couple of years with houses. It's my
Yeah.
punt.
Yeah, although the entry level price points, once again, those houses, they are doing well. You know, properties guided to 2.2 are selling for 2.5, but they're sensitive price points. And so if that guide is misplaced, they're sitting on market longer, taking their time to find their feet. And buyers are, you know, looking at that sitting on the market, and they're wanting the new shiny object, you know, the new shiny toy as other properties come on in spring. And, you know, this is the first week I've actually seen the stock levels come up a little bit. So let's watch the space.
And I wouldn't use the word cheap properties doing well. I'd use the word essential. Essential properties are doing well in the market, because there's certainly $1 million is certainly not cheap for anything. But it's essential, you know, for a first home buyer, 1 bedroom unit, for a first home buyer, 2 bedroom unit, those essential units. Very, very good performance at the moment.
That's a great show. Thank you very much.
Love ya.
See ya.
ya.
Bye.